5 stocks I've been buying heavily, and 2 still have massive chance for opportunity, in my opinion, which is why I'm piling a ton of money into them. And that's what we're going to be discussing in today's video. Now, before we get into these picks, guys, please do me a favor. I'm trying to get to 10,000 subscribers. All I ask in return for these daily videos where I keep you up to date with the market and my portfolio is you hit that subscribe button, and let's just jump into it. Just before we jump into the video, please remember nothing in this video is financial advice. I am not a financial advisor and no results are guaranteed. There are some affiliate links in the description and I may earn a commission at no extra cost to you. We've got Amazon. I've been telling you guys, I'm buying it heavy. In this region, we were buying heavy. In this region, I bought again. And you can see, let's just average the price there. For example, 25% gain in Amazon, which is now at almost all-time highs. The next absolute magnificent move we've seen, which I definitely do not think is over yet, is Microsoft. Now, Microsoft is one of the most hated stocks, one of the most hated companies. Yes, the quiet people don't hate it, but the people online, the social media experts, they have been hating Microsoft because it's old, it's outdated, it's over, it's done, but they don't understand the core business of Microsoft. They don't have their finger on the pulse. They haven't done their research. Of course, this is all based on my opinion, but what I've been sharing with you both here on this channel and the Open Wallets podcast. Some of my biggest investments in my life have been over the last few months into these stocks. The reason I've invested into them is because I've built my essentially career on figuring out that the majority of retail, which of course I am, but the majority of us, they tend to make the wrong decisions. They tend to digest information and data incorrectly and then make incorrect decisions based on that, which results in buying prices that are high and selling prices that are low, overall losing money over time. Now, the problem is most people who consider themselves investors are actually behaving like traders. That's not what I want to do, and that's not what I want to share on this channel. What I want to share is long-term investing mindsets that in opportunities like this are not long-term at all. In fact, I've made a significant amount of money in just 3 months, which is not long-term, by the way. It's very short-term. And it was with a long-term investing thesis at mind. That long-term investing thesis with Microsoft was simple. People are underestimating how many massive companies are locked in to Microsoft products. People are underestimating how much of this capex that they're worried about Microsoft is spending to be the best in the AI space. And when you couple those two things together, you have massive corporations and massive enterprises that are locked into Microsoft products. You have Microsoft spending loads of money to make their AI products the best, build out the infrastructure, which the companies and the enterprises that are forced to use it will use. And if they like it, they'll use more and more of it. More companies will come online. And there's so much bullishness here if Microsoft get it right. Now, my question is, do you think that the heads of Microsoft, Amazon, Meta, and Google are all wrong about their AI infrastructure spend all at the same time? The brightest minds in the stock market, the brightest minds in tech, all wrong, all at the same time. That's a question that you have to answer. My answer to that question is no, I don't think they're wrong. So therefore, I'm giving them my money because I think they make number go up in very simple terms. However, you must understand that this could be wrong. My thesis could be wrong and I could lose money over time. I don't think that will happen, but it is a possibility, all right? So don't blindly follow me. Do your own research and start with answering that question. Are all of these companies all wrong all at the same time? That's a question you'll have to answer yourself. So I told you about Amazon. We're already back at all-time highs, essentially. Stone's throw away. What are we off all-time highs from where we sit today? 2.5%. So let's just call it we're back at all-time highs. So that was the opportunity, right? Closing the gap between here and here. 41% gain. This is where I started buying Amazon heavily in February and March, right? February and March, right? Guys, February and March. We're in July. It's just been a few months. 41% gain. That is 4 times the amount that the S&P 500 on average moves, right? So 4 years of gains from the S&P 500 in, let's call it 4 months. Incredible. Now, Microsoft is yet to close the gap. Microsoft still has ways to go before it gets that all-time high. Now, Google was my most recent purchase. And what I've noted from my career of buying when I think retail are wrong, you see these sorts of moves. You see how Google gapped down. We had a move in a single day of um, 10%. Now, if you look at the data of their earnings, they were very good earnings, in my opinion. However, the price went down 10% in a single day. One of the biggest companies in the world going down 10% in a single day because they're spending money on AI infrastructure when the whole world is excited about AI and they're willing to dump their money into Micron at all-time highs. The whole world is willing to do this. They want to sell Google. It doesn't make any sense to me. And there lies the opportunity. That's what I believe anyway, right? So 10% down in a single day, brilliant. I'm going to start a position. I bought about $100,000 of Google right at this region right here. Sorry, you see my big head. Right at this region right here. And we're up 12%. A year's worth of S&P 500 gains in less than a week. Incredible, right? Doesn't mean it's going to last. It may go down and roll over again. The AI bubble might burst and affect these even more. But the key here is that I'll continue to buy. I want to hold these until at least they break their all-time highs once again. And then my thesis is, well, I'll look at the macro. I'll look at what the companies are doing. I'll understand it. And then maybe I'll sell and I'll just move this money into an ETF like the S&P, like the NASDAQ. Why is this? Do I think the S&P and the NASDAQ will outperform? Probably not. But preservation of capital is very important to me. I've taken a lot of big bets in these markets, and some of them have paid off really well. Others have lost me money. But overall, I want to protect my capital. That's what's most important. So we have Amazon, we have Microsoft, we have Google. All the same thought process. People didn't like Amazon when it was spending money. They still don't like Microsoft when it's spending money. They don't like Google when it's spending money. Now, Meta is the first one that I think is still very much a large opportunity. I bought more of this yesterday myself, dollar cost averaging while it's down. Now, Meta's a little bit different because the market is not only worried about their CapEx spend, they are also worried about litigation. They're also worried about people moving away from social media as much. They're also worried about Mark Zuckerberg and the company not being good, right? I kind of agree with all of those things. They're all worries. And I don't think Meta overall is that good. But I'm here to make profit. If I hold the NASDAQ, I hold Meta anyway. And if I believe that the market is mispricing a certain stock, that's when I'm willing to buy heavily. I think we're going to see these sorts of gains like we've seen on Amazon on every one of the 4 stocks that I've spoken about. Maybe not all at the same time, or maybe all at the same time. But this is what I think the opportunity is. And that's why, right? I would much rather put a lot of money into these stocks than a small amount of money in comparison into Micron. I'm not going to put a lot of money into a stock that's moved this much because that would be crazy. I wouldn't be able to protect my capital. I'd be too worried. I wouldn't be able to sleep at night. But I can put a lot of money into Amazon, a company that I use almost every single day, which was down 30%. Microsoft, when I started buying from the local high, down 36%. Meta, currently, at the time of recording this video, down 30%. Google, at the time of buying it, down 21%. I can feel comfortable buying them. So why might I want to buy Meta? Well, the core business is strong. The miss was just noise. Revenue hit 60 billion, up 28% year over year. Ad impressions up 14%, price per ad up 12%. The EPS miss came from almost entirely one-off items. Strip out the charges and the profitability actually grew. CFO said that excluding 2.4 billion in legal charges, litigation, and 1.18 billion in severance, operating income would have risen 9%, not fallen. CapEx is a bet and not necessarily a red flag. Meta plans to begin manufacturing its custom AI chips in September with Broadcom and TSMC, aiming to cut reliance on expensive NVIDIA and AMD GPUs, which some read as a path to controlling AI costs long term. And my thought around this long term thing is, right, if these companies are spending their money now and AI continues to boom, things are going to get more and more expensive. But the 4 companies I've already spoken about today will have already built out their infrastructure. Meta right now is literally beginning at manufacturing of its own chip. And people don't like this. It's crazy. The valuation to me looks more reasonable after the drop. right? So I'm much more happy buying now after it's dropped another 11%. The valuation looks good, right? Meta's guided next quarter revenue 61 to 64 billion and narrowed full year capex guidance to 130 to 145 billion. However, there is a counter case worth noting. Free cash flow collapsed to 784 million this quarter from 8.55 billion a year earlier. And some analysts like BMO Capital argue Meta has the least viable return on investment story among its peers for its AI spend. Whether the capex pays off is still unproven. So it's essentially taking a bet on the management at Meta. Will their spending pay off? That's the question you have to answer for yourself. Now, those are the ones I've put in significant capital, those four. Now, there is a stock that I've put in much less capital, but I am quite bullish on. Now, this is SoFi. We've spoken about this a lot. I started buying at $5.60 and then I just sat on my hands. I haven't done anything, right? Waiting patiently. The price then came all the way down to $15, lower than my initial entry, so I doubled my position. Now, the reason why I've started off small is I actually believe that the finance sector and the fact that it's crypto adjacent could actually be short-term bad for the price of SoFi, not the company, but the price. So therefore, when I bought Amazon, Microsoft, Meta, Google, I bought them because I thought it's going to be that people are going to realize this capex. They're reading the capex wrong. SoFi, I still think has a lot of market forces. So I could be wrong in that and we could rally, but now I've doubled my position when we hit 15. I'll probably do a similar thing again when we hit 14, or if we hit 14, 13, 12, 11, 10, that sort of thing. People might say, Connor, you're an idiot. It's never going to go that low. Great. I don't want it to go that low. I'll make loads of money on the way up. If it does, great. I want it to go that low because I can just DCA more and then it will go up. That's my belief anyway. And I think SoFi still has a great opportunity considering how down it is and how much retail is mispricing the financial sector. That's my thesis. That's what I'm thinking. And it's a Saturday, so go out and enjoy yourself, guys. If you enjoyed this video, though, do me a favor, hit the subscribe button, and I'll see you in the next one. Peace.